Hello traders, you are welcome back to the Forex Geek channel. In this channel, we break down the best trading strategies to help you navigate the markets like a pro. And in this video, we are going to be discussing square the range trading system. It's a nice method that helps traders identify key levels and make precise trading decisions. So if you are looking for a structured way to analyze price action within a defined range, then this strategy is for you, okay? Stick around as we break down how to set it up, key concepts behind it, and a couple of examples to help you apply it to your trading. Before we get started, make sure to hit that like button, subscribe to the channel, and turn on notifications so you never miss an update, okay? Let us jump right in. All right, let us start with the basics, yeah? The square the range trading system is all about identifying and trading within a well-defined market range. The concept is pretty simple. We first determine a key range in the market. Typically based on significant highs and lows, all right? Then we break this range into precise quadrants or levels to pinpoint potential entry points, stop loss areas, and take profit zones. So this method allows traders to analyze market structure effectively and take advantage of price reactions at these key levels. Now, one of the biggest advantages of this system is that it helps you avoid unnecessary noise and focus only on structured trade opportunities. So instead of chasing random price movements, you are working within a logical framework that makes sense. Sounds good, right? Now, let us just talk about how to set it up on your chart. Now that you understand the concept, let us go over how to set up the square the range trading system on your chart. Okay, the first step is to identify the range. All right, you have to identify the range first of all. You look for a clear market structure where price is consolidating within highs and lows, right? Within a high or a level of resistance and a level of support. Okay. Let us just go to a higher time frame. You can see that this range I identified was on the 30 minutes time frame, right? Let's go to the higher time frame, okay? Because the range could actually be between the previous day's high and low. So can you see that the range we identified fell within the previous day's high and low, although it's about between the highs and lows of the previous about the highs and lows of the previous 4 days. Yeah, so this range can actually fall within the previous day's highs and low, but coincidentally it fell within the previous 4 days highs and lows. Now the second step is to divide the range into quadrants. So you take the total range and divide it into equal sections. All right, divide it into equal sections. Typically, you will have 4 key zones. You will have the upper quarter, the mid-range, the lower quarter, and the extreme low or high. All right. Now the third step is to use the levels for trade execution. Price often respects these levels making them great areas to look for entries. Okay, you can combine these levels with price action confirmations like candlestick patterns or volume shifts for better accuracy. All right. Now, a pro tip, many professional traders use this method to trade reversals and breakouts efficiently. So you don't need to complicate things. You don't necessarily need complicated indicators, just market structure and price action. Okay. Now, we can see that this example I highlighted is actually a range, right, from previous sessions. And you can see that I've squared the range into 4 key zones. Yeah. So you can see how price reacts when it touches uh, the mid range, when it touches the mid range and the upper and lower quarters, right? You can see the upper and the lower quarters and the mid range. You can see how price reacts when it touches these levels that I mapped out on the chart. You can see a rejection here. You can see well, a rejection here, a rejection here. Well, this place you can see there was a rejection here. You can see here, you can see here, here. You can see this point, you can see this point, right? So instead of blindly entering a trade, we are using these structured levels to guide our decisions. This approach helps you stay disciplined and avoid emotional trading. Comment below if you've ever used a similar approach and let me know what you think. Okay, so basically that is a wrap for this breakdown of the squared range trading system. Now, of course, when you are scalping with this system, ensure to also observe good risk management, right? Do not trade with an amount that you cannot afford to lose. And when you are executing a trade, you know, if you are scalping, of course, ideally you should be targeting 1 to 2 weeks to reward ratio minimum, but you know, for the sake of scalping, sometimes 1:1 is acceptable. Just ensure that you are quick with making your decisions. So perhaps you are entering a buy. Once you get a confirmation, you know, you can exit at the next key level if you notice a sign of a reversal. But if you notice a breakout, you can exit at the next level, and so on. If you enter a sell, you know, you can exit at this level. But if you notice a sign of continuation, you can actually exit at the next level again, and all of that, right? Just ensure that you are quick with making your decisions. Okay, so if you found this strategy useful, smash that like button and drop a comment below with your thoughts. Also, don't forget to subscribe and turn on notifications so you never miss our latest trading strategies. We are bringing you more content to help you level up your trading game, so stay tuned. Until next time, trade smart, stay disciplined, and I'll see you in the next video.